everyone. It's Ben Buckner and Dan Boss with Ag Resource Company. It's Tuesday, October 28th. Markets higher. We're in kind of day two of this new era, framework trade deals, uncharted territory to some extent. So we're all kind of trying to chase down the new reality of markets. I think, Dan, we still cannot find any real hint that China's buying U.S. grain, soybeans today, but also balance sheets from the trade kind of in flux, people putting in their own numbers. We've got ours as well. And so, yeah, it's kind of been a flurry of geopolitical activity as the White House tours Asia, and that is still priority number one by, I think, a pretty wide margin in terms of price discovery. So how this all kind of gets sorted out, there's still a lot of risk on the table. We have now tested exactly the upper end of soybeans' 14-month range. We are within a fraction of a penny of filling a gap in December. So what is the farmer specifically to do now that we've got all this new information and really new prices?
Well, Ben, good morning, everybody. And I think that's the right question, Ben. I think, what do you do with this? Because, we have all of these rumors, innuendos, uncertainties surrounding the market. And we'll all know, and we'll be better, smarter Wednesday evening, Chicago time, as Trump and Xi meet and we have better details. As you think about where Trump was last night, this is kind of if you will, a summit between the new Japanese minister and President Trump. They, of course, affirmed the old trade deal from before. That means $8 billion of U.S. ag goods. Again, not a big increase, if you will, maybe a little additionality in terms of U.S. soybeans, but not meaningful down the road. So that is behind us now. Trump is leaving Japan, heading to new destinations and ultimately to APEC in terms of South Korea going forward. So, if you look at the upcoming meeting between Trump and Chinese President Xi, the Chinese have not fully yet, embraced this meeting on the sidelines of APEC. We'll see how it all goes. This is a picture from 2019, as you can see. So, this will be the first meeting between the two presidents since then. I'm sure it'll be very cordial. I'm sure they'll have their best faces on as they look at the media. But behind the surface or behind the scenes is still a lot of tensions. I think that the Chinese side has not been very willing to go forward with what the U.S. is embracing. With that in mind, I'm told that the deal's weather is still in flux. So when I look at the cash market, to your point, no new Chinese purchases that I can find in U.S. soybeans. When I look at the futures market, we see open interest dropping sharply yesterday on Monday's rally. Corn, soybeans, and wheat all down. In the case of corn and beans, 18 to 19,000 contracts each. So if China's coming in and buying futures, there's no indication of that as it sits today. And the U.S. farmer yesterday was a big seller on the rally. So I think that's the right thing to do for the U.S. farmer, but there's a lot of uncertainty. I hear discussions in the trade circles of, China looking at buying anywhere from 0 to 20 million metric tons annually over a few years. So I don't know what to pay attention, but I would say that all of this is non-binding. So whatever we get from China, unless there's some real legal teeth behind it, is probably not something that'll be, I think, achievable or sustained. And unfortunately for the U.S. farmer is looking for something other than promises. U.S. farmer wants to see some demand. I would imagine you will see China buy something, but I think it'll be disappointing as we think forward. As you think about the impact of what this means, and so with that rumor mill in the background, I think it's important to kind of look at what it means for prices. So if you look at the market today and you take USDA's 7% or 6.6 stocks to use ratio, it would tell you that maybe soybeans can make it up to $11.50 a bushel. It's not unreasonable or unprecedented. Though if you stand back from the market and you look at our stocks to use ratio at around 12%, which is soybean end stocks of around 480, 490 million bushels, and China would be importing somewhere between 8.5 and 9.5 million metric tons in the crop year, you come up with a price of $9.50. So Ben, there's $2 in between this whole discussion, depending upon how it all pans out. So I think the farmer, this is the best way I can put it to him and how he needs to manage his risk. When we look at the corn market, we can even highlight that even a little more. Corn not as having quite as much variability. USDA in the September WASDE had U.S. corn stocks to use ratio around 13%. That would correlate with a corn price, somewhere around, or a cash price somewhere in the vicinity of $4.20 or $4.25 a bushel. December corn futures at $4.30 are about 10 cents above that. If you use Ag Resources stocks to use ratio at around 15.5%, we believe the average cash corn price in the United States will be down around 380 a bushel. So that's the skew, if you will, between corn and soybeans and what the farmer needs to think about. I believe if March corn makes it up to, I don't know, 447 to 455, that's a big sale opportunity. I think the world wheat market is oversupplied. You get wheat up at 550 to 560. That's an opportunity. I really, maybe it's possible the Chinese buy some grain, but I don't think, again, the quantities will be large from the United States. And I don't think the hammer is there for the United States to keep the overall agreement going longer term. Remembering that we do have a November 5th oral arguments in front of the Supreme Court. There's a lot of people in Washington that believe that Trump's tariffs will ultimately be ruled illegal. Let's see how that all plays out, but that would surely defang a lot of his policies that are sitting there today. When you look at South American weather, you can see that Brazil is looking at an abundance of rain. The monsoon is there. We're covering up much of Brazil, most of South Argentina, and we do have a below normal temperature profile on top of it. A little bit of frost freeze, if you will, in southern BA and La Pampa in southern Argentina. But otherwise, this is a very favorable weather pattern going forward. And I would imagine that you're looking at very sizable crops in the making if we keep this weather pattern in tow heading into the middle of December. That's the key month for soybean production and yield determination. December and the first half of January, Ben. After that, it really shifts to Argentina and what will happen there.
Yeah. And to me, it kind of jumps out. Just never going to be dry in Argentina. It's something we've seen for the last 3 months. So could that be a surprise? And thinking too, risk management from a very high level corn, the stocks to use price curve you showed. You really got to pull corn stocks to use or perceived stocks to use below something like 9 or 10%. I think to get a real change in the market, and that's going to be incredibly arduous, at least for the next 12 months. Soybean stocks to use versus price. Yeah, there's a lot of things that could be floating around. So it explains why the market's doing what it's doing. But it's also, the addition of premium warranted positive geopolitical movements. But also this has all been digested in a week is something I think we're thinking about. So what's next? So stay tuned. We're going to know a lot more information. It's going to come pretty fast and loose. But like you said, Wednesday evening, hopefully we know whether we're moving forward or not with China, and then hopefully thereafter seeing some physical demand. Be careful, lots of volatility, all the best in the markets, and we'll talk to you tomorrow.